This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Friday, March 1st, 2024, and we're so glad you can join us for this first show of March. In today's show, I will bring you the latest Iowa Ag News headlines. Also going to bring you a conversation from Commodity Classic in Houston as Dustin Huffman, joined by Paul Scheetz of ADM. It is time now for our closing market summary.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Joined at the end of another trading day by Robin Schmahl of agmarket.net for our closing market summary. Friday, Robin, what did we see take place in the grains today to wrap up the week?
Well, we saw a divergence between the corn, wheat, and then the soybean complex. And soybean complex was soybeans and meal. Soybean oil struggled a little bit, but we saw quite a divergence. So we saw pressure on corn, and most of that pressure seemed to come from the pressure on wheat. Wheat was down pretty substantial, down about 20 cents near there at the close. And corn just based on that. Wheat just continued to struggle because of sluggish exports. Some technical selling, wheat can be more subject to the technical selling standpoint. It pushed it right to the lows of what we've seen before. So it's not a lot of strength underneath that market at the present time. Well, we got some warmer weather coming into the Plains states, which is getting to the point where it can break dormancy. We've got some longer term or longer weather forecasts suggesting some wetter weather. So that might be very beneficial. So that just piled into that market today. Now, one of the things we did look at too was the looking at the insurance prices. Now they were settled yesterday or released yesterday, but I just want to reiterate it today. Corn's at 466 for the February average price. That was down 21% from last year, or down $1.25 a bushel. Soybeans at 11.55, down 16% from last year, down $2.21 a bushel from a year ago. So we're seeing a lot of lower revenues based off of that price. And why I wanted to bring that up is because I've seen so many years being in this business that during the month of February, when price discovery for insurances, we generally don't see much of a kind of a rally, more steady prices, choppy prices, but not much of a rally. So with the fund short positions that they are in beans and corn, and now that it's past that, I can't personify the market, but it seems that that's the time that we start to see a little potential for more strength coming into the March, April, but don't hang your hat on that. It's got to be supported by something to trigger the fund short covering. Drier weather initially probably isn't going to do it. It's just got to be something else or extended dry weather. So I can't tell you it's going to do that right away here in March, but it just seems to be over the years that that's kind of the pattern. Now, one interesting thing is we heard that a farmer planted about 50 acres of soybeans yesterday. And that's in the Midwest. And that's crazy, but anyway, everybody's chomping at the bit with this kind of weather, so it'll be interesting to see how that all pans out. Now, when we look at the estimates of producer percent of crops sold, we got corn at 53%, the 5-year average is 67%, soybeans at 63%, the average 5-year average is 74%. Now, those are the estimates of what producers have sold right now, so we're running behind the 5-year average, which we understood that with the lower prices. Producers were holding on to their crops. So it's something to realize that if the market rallies, there's quite a bit of corn and soybeans that could be triggered and sold into the market, which could limit some of those rallies. Now, Buenos Aires Grain Exchange, they left their crop forecast unchanged due to recent rains that they've been receiving in Brazil. They've got it at 52.5 million metric tons of soybeans and 56.5 million metric tons of corn. They left that unchanged on their weekly estimate. Now, Ukraine set a monthly record for exports of 8 million metric tons of cargo that were exported. 5.2 million metric tons of that were agricultural goods. So despite the war down there, the issues they've been having, they're getting stuff moved one way or the other. So it is creating some competition in the market as well for us. So it'll be interesting going through into next week to see how the trade is going to be looking at both the weather and both our export inspections that we're going to be looking at on Monday.
Like you said, Robin, also just squaring away those positions at the end of February, going into a new month. It will be very interesting to find out what the markets do on Monday. As for today here, how did the livestock side of the ag marketplace wrap up?
Well, livestock found some support today. I should refer to that as the cattle market. Hog prices were slowly moving higher all week. So actually, the last 3 weeks, hogs have really shown some nice gains, but they showed a good gain today. In the cattle market, the traders stepped back into that market after seeing some pressure for 2 days. Cash cattle in the south traded steady, 183. Northern dressed cattle traded $2 lower today, and down at 290. So the steady cash trade that started to develop put a little pressure on the market because traders were looking for maybe some better trade, and that didn't happen. But then when we actually saw more trading being done with the northern cattle at $2 lower, it didn't really make any difference. I think the trade just wanted to buy the break, move price back up again. After all, supplies are tight. And that's in the bigger picture. So they buy the break. Box beef prices at midday were up $1.91 and select was up at $1.81. That'll change by the end of the day, but we're still continuing to see some stronger box beef prices that we saw most of this week. And there's also some concern that could have developed. It's in the bigger picture, and we don't know what it'll be. The Smokehouse Creek fire in Texas, burning over 1 million acres, the largest fire they've ever had. And now we look at the concentration of cattle in that area. It's not really heavily concentrated where it's burned. I mean, there's cattle there, not as heavy as surrounding areas, other parts of the state. There's no processing plants in that area, but they are processing plants close to that area. And close to that area to the west farther is a huge concentration of cattle. So the key is going to be where they can maintain that fire, and how many cattle is really going to impact. We're in a tighter cattle market already. So now we lose more herds of cattle, more feedlots, feeder cattle, more female cows that can produce the offspring. It's providing some support, I think, psychologically under that market. We don't know how that'll all pan out yet, but we certainly feel for those people in that area, and we hope that they can get that fire contained fairly soon. In the hog market, we saw a huge increase in cutouts at the midday report, up $5.32. Now, the change in cash from the National Direct report really wasn't released due to Packer confidentiality, but the average price was $71.42, the average cash price. So we don't know exactly where that lays relative to the previous day. Now, the hog futures, they were lower earlier. They uncovered some solid buying interest, and pushed prices higher. I mean, new highs again, significantly gains in some of the early months, and pushed June over at $101, July over $102, and August really right in that area of $102. So the hog market really has changed in the last 3 weeks. If you look at the charts, it's been an incredible rally, and I think the potential for or the prospect and the anticipation for better demand. We did see some good exports really again on Thursday. So what was anticipated to happen is coming to fruition, and that's really beneficial to producers.
Certainly has been a nice run for the hogs, and I know that we're all glad to see that the hogs at least on a little bit better firm footing right now. Robin, thanks so much for taking the time to join us on the show here today. What's the best way for our viewers to get in touch for more marketing information?
Well, they can call me directly at 877-256-3253 or go to our website, agmarket.net. There's a toll-free 844 number on there. Feel free to call and somebody will answer the phone.
Robin, thanks so much for taking the time to join us on the show today. I don't think you're headed out the door anytime soon to go and try and plant any soybeans, but thanks so much, and we'll talk again soon.
All right, thank you. It's always a pleasure.
Thank you to Robin Schmahl of agmarket.net for our market summary. Let's turn now to the closing numbers, which can be found under the Markets tab on our website at iowaagnet.com.
March corn is down 3.5 at $4.12 1/4. March soybeans up 14 3/4 at $11.43 even. March soybean meal up 70 cents at $3.34 even. March soybean oil down 4 cents at $44.62. Chicago wheat down 17.5 at $5.60 even. Minneapolis wheat down 16.5 at $6.48 1/4. And Kansas City hard red wheat down 22 3/4 at $5.80 even. March oats up 3/4 cent at $3.78 1/4. On the Merc, April live cattle up $3.10 at $188.45. March feeder cattle up $3.97 at $252.97. April lean hogs up $1.45 at $44.07. April pork cutout up 70 cents at 94 even. And Class 3 milk down 18 cents at $16.78.
That is our market coverage for today. Thank you to Robin Schmahl of agmarket.net. As it's time now to hear from our sponsor, the Iowa Soybean Association and the Soybean Checkoff. Up next, it is the latest Iowa Ag News headlines.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It is time now for the latest Iowa Ag News headlines. March Madness almost here for college basketball fans, and that means it's time for pulled pork madness for Iowans who love delicious pulled pork sandwiches. The Iowa Pork Producers Association accepting nominations now for the restaurant that serves up Iowa's best pulled pork sandwich. The annual contest started this morning. Nominations can be made at the Iowa Pork Producers Association website, which is iowapork.org. The contest is now in its 7th year. Pulled Pork Madness highlights the best of the best when it comes to serving up Iowa-made pulled pork. Whether your favorite pulled pork is sandwiched between 2 buns, open-faced, or smothered in cheese, we want you to tell us where to find it. The winning restaurant receives $250, also a plaque, and then, maybe most importantly, statewide bragging rights. Based on fan nominations through March 8th, the field will then be narrowed to a Sweet 16. That represents the top 2 picks in each of the Iowa Pork Producers Association's 8 districts. The champion will be announced later this month on March 29th. Now, past winners cannot be nominated. Pulled pork must be from a restaurant that is typically open year-round with regular hours. Food trucks, concession stands, seasonal establishments, and catering businesses are not eligible. No email or social media nominations will be counted. You can make your nomination today at iowapork.org. And as Riley and I are here in Des Moines at the Iowa Agribusiness Radio Network studios, Dustin Huffman has been in Houston this week for Commodity Classic. It was a big year in 2023 for the ADM Regenerations program, with a lot more planned for 2024. It's time now for Dustin's discussion with Paul Scheetz of ADM here on Ag Matters PM.
All right, we're here at Commodity Classic 2024, Houston, Texas, talking with Dr. Paul Scheetz of ADM. First of all, thanks for taking a few minutes out of your schedule to talk about things today.
No problem at all. Happy to be here.
So we're talking about your Regenerations program. We've talked about it in the past on the network, but what is the message you're bringing to the farmers from across the country here at Commodity Classic?
Yeah, the biggest thing is if they are thinking about adopting a conservation practice that could include cover crops, conservation tillage, or some sort of fertilizer efficiency program, the one thing that we want to do is provide private funds to help with that decision tree, because we know that each one of those decisions that are ultimately made comes with a productivity or a cost concern that's associated with it. So as a private entity, a grain handler, we want to offset some of those productivity and cost risks by being able to offer them not only dollars, not only incentives, but also resources, because we have a lot of technical assistance partners that help us with these programs as well. They give them resources on how to do it correct as well.
So we hear about a lot of programs when it comes to regenerative agriculture or carbon credits or this or that or the other thing. What is it about your program that's different from all of these other ones?
So you're right, Dustin. It is a super noisy space because it's still early. Even though conservation ag isn't early, the incentive structures and the contract structures is still in early days. I do think we start seeing a little bit more standardization over the next several years, but I think it's a lot of noise that farmers ultimately have to deal with today. The one thing that we love about our programs is that it took us 10 years to develop them. We've been engaging farmers since 2012 on just collecting data, what works, what doesn't work, what's their frustration. A big item we hear is long contracts, 5 to 10 year agreements when they don't necessarily know what they're going to be doing in 5 to 10 years. So we offer annual contracts. Another component is additionality that you hear in as a requirement in a lot of carbon offset programs. We do offer incentives for early adopters as well, because the truth is, in any of the programs that we've stood up over the last several years, whenever we get a chance to lean on those early adopters to tell the story and show how passionate they are about adopting these practices, really helps us to recruit more growers on it. So I'd say those are probably the two items: contract length flexibility and also the ability to reward early adopters of certain practices.
And now you're also in partnership with FBN on making this work, correct? Tell us how that works.
Yeah, the one thing that we figured out really early is we can't do it on our own. There's core capabilities that we have, like buying grain from farmers and having strong relationships with farmers that we could lean on. But ultimately, there was two kind of gaps that we saw. One of them was what you're talking about. It's the data collection piece. We didn't have an in-house platform that we could efficiently collect data to ultimately get the outcomes that we need. Because the biggest item is, it's super frustrating to give this data, especially from farmers, especially when they're giving it to FSA offices and they're using it for some of their other technologies to ultimately have to give it for our requirements as well. So we want to try to make it as easy and as streamlined as possible. But one thing that we ultimately need, I use the example of like grade school math. When you answer the question, if you don't show your work ultimately on that, then sometimes you didn't get the answer correct. And on our side, as it's early days and we're trying to substantiate the impacts associated with these practices, showing work really, really helps for that commercialization and that long-term incentive offering. So FBN's helping us not only with trying to have like the ease of use of collecting this data, but the rigor around the outcomes as well. Another partner I'd like to call out is our technical assistance partners in a lot of regions that help with the agronomic expertise around planting a cover crop or conservation tillage or fertilizer efficiency that includes American Farmland Trust, Ducks Unlimited, Minnesota Soil Health Coalition, Kansas Association Conservation District, Practical Farmers of Iowa, Flint River Soil and Water Conservation District.
All right, and so let's start with the data component, though. You made the mention about all the data that's needed to make sure you're getting what you need. Obviously, data security is something that's very big. How can farmers be rest assured that their data is safe and is only getting seen by the people who need to see it for the reasons they need to see it?
No, that's a great point. So we outline in all of our agreements with farmers specifically like what the data is being used for and who has visibility into it. And every program is slightly different. Sometimes there's a component that asks for that requires a third-party verification, which a third-party auditor could come in the field and ask questions in which they'll be visible to the information. But the majority of all of our reports that we deliver, either to downstream customers or downstream reports, they're anonymized and they're aggregated, which is really, really critical. And data privacy is the most important issue that it comes up in almost every meeting that we have. I have yet to hear somebody say that their data isn't secure. So I can understand there's skepticism from farmers in that scenario. But the great thing about partnering with FBN is we've had a chance to cloud vet their system to make sure that it's secure. And they do have third-party verification. There are companies out there that give third-party verification of the security of that data as well, of which they've achieved, which is really critical in partnering with them in this endeavor.
All right, and so you mentioned partners, Minnesota, Iowa, Kansas. You're going to be talking to farmers from all over the country. Obviously, a field in Minnesota and Iowa is different from a field in Kansas or Georgia or anything else. But how is it you can tell that story and get more people involved? Because there are still a lot of holdouts, I would say, in agriculture to going into regenerative agriculture, conservation farming, carbon sequestration, whatever it is. There's a lot of people still pumping the brakes on that. How do we get more people around the country involved and realize it's not a one-size-fits-all at the same time?
No, that's a great question, because the one thing that we had to figure out over the last 10 years is regions do vary. Cover crops don't work on every farm. They don't work in every region. They don't work around every single commodity. Conservation tillage is a different story depending if it's wheat, or if it's corn, or if it's soybeans, or if it's peanuts. So we have to be smart on building and designing the programs, but there's no way of us building and designing programs super successfully without farmers helping us, enrolling in the program, giving us feedback of what's working and what's not working. I'll give you a practical example. We rolled out our first program in Canada this year. We got some constructive criticism from farmers on what works in Canada because we don't have the 10 years experience like we do in the US, and we've completely redesigned the program completely this year. But my call to action to farmers is there's a lot of skepticism around the space. There's a lot of noise in the space as well. You don't have to enroll all your farm or make a significant change in practices, or give data across your whole farm. Get a feel for it, because the one thing that I have noticed over the last 12 to 18 months is the funding opportunities are significantly higher than what they were the previous 5 years, 10 years, 20 years. And that's not only from the grain handlers, that's CPGs, that's fuel markets, that's export markets. It seems like this is going to be another revenue source, and just starting will get you so much more familiar with the process, the contract agreement language, what the requirements ultimately are, that if you can just start on a little portion of your farm, you're going to be way more educated. Because that's the way we look at designing our programs as well, is we never look back and say, I regret doing this 2 to 3 years, because we learned something from it, we got better at it.
All right, so farmers are going to be listening to these stories, going to maybe think, this is for me, maybe this is what I want to do. What's the next step? How hard is it for them to get that ball rolling?
Yeah, so every program is slightly different. On our side, we will have on our website, which is admadvantage.com/regen, that will show all our program offerings. So our enrollment ended last year in December. Second year enrollment, or I guess it would be 12th year enrollment, the second year of what our ADM Regenerations program is going to be live on March 15th,
okay,
to where you can access that at any point in time. Plus, your grain buyer is going to be very familiar with all the offerings we have. So if you have an ADM grain buyer and you ask them about any of the ADM Regenerations programs we have, they'll be able to show you what we offer in their specific areas. So I would always go use those resources, either your grain buyer, look online, and I'm sure you'll see a bunch of marketing around social media and radio ads that you'll hear from us as well.
All right, well, Dr. Scheetz, that's all the questions I have. Is there anything you want to add in closing today?
No, appreciate the time. Thank you for letting us tell our story, because that's our goal ultimately, is telling the story of the good work that the farmers have been doing for the last 30 to 40 years, and then trying to provide incentives in the form of technical assistance support and direct dollars to accelerate the adoption of Conservation Act. So appreciate the platform.
All right, and we're going to bring more conservation and more agriculture talk here from Commodity Classic 2024. Again, all our programming brought to you by the Iowa Corn Growers Association.
Thank you to Dustin and Paul Scheetz of ADM for our conversation today here on AM PM. And that wraps up today's news headlines, brings us as well to the end of today's program. You can find all of our content on our website at iowaagnet.com. You can also follow us on social media on Facebook, X, TikTok, and LinkedIn. And you can find our video content and previous episodes of AM PM on our YouTube channel. Don't forget our free twice daily market podcasts, which are on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Mark Magnuson. On behalf of Riley Smith and Dustin Huffman and Andy Peterson, we thank you for watching. This has been Ag Matters PM.